Alright, what's up everyone? Welcome back to Compound Interesting. This is Emil, and in today's video we're talking about the investment of the decade, or the investment of the century in my opinion. And it's something that I haven't really talked about enough in my opinion on this channel, but it's actually my biggest investment out of any other investment, and that of course is Bitcoin. Now I've packed in about 3 videos worth of information into this one video, so we have a lot to cover. So we're going to be talking about the catalyst for growth for Bitcoin over the next couple of years, the next decade, and also the use cases for Bitcoin. And we're also going to talk about the advantages of Bitcoin and why Bitcoin is going to actually improve the world and make the world a better place, which is always something that I like to invest in, something that's actually going to push the human race forward and also help people out of poverty and everything like that. So just before we get started, I just ask that you quickly smash the thumbs up button, because it really helps the small channel get off the ground. Thank you so much. Subscribe if you haven't already. I usually talk about the stock market, so this should be a fun one talking about Bitcoin. And with all that said, let's get cracking straight away. All right, quickly we'll start off comparing Bitcoin to gold and fiat currency, so you can see the different traits of money, so what actually makes sound money. So I'm not going to go through all of these because some of them are quite obvious, but maybe some that you don't really understand. Verifiability and fungibility. So fungibility basically means like my 1 Bitcoin is equivalent to your 1 Bitcoin, my 1 ounce of gold is equivalent to your 1 ounce of gold. So that's why they're both high in fungibility. But say my apple might not be equal to your apple because your apple's rotten. And obviously all the other traits, verifiability, I can prove that this Bitcoin is a legitimate Bitcoin, whereas with gold it might be a bit more difficult. This is real gold or this is real currency. The rest of them are kind of straightforward enough. It's kind of obvious why Bitcoin's more portable. It's much more divisible than gold. Obviously gold's very hard to divide up. You can't divide up gold into 1 cent worth of gold. And similarly with fiat currency, you can't divide fiat currency into 1/10 of 1 cent of euro. But with Bitcoin you can. Okay, scarcity. Now that's one that's very, very interesting, because fiat currency has basically an unlimited supply. Gold has quite a large supply still in the earth, and Bitcoin is the first ever invention of true scarcity, where there's a limited cap of it, and there's never ever going to be more created than 21 million Bitcoin ever. So that's the first invention of true scarcity. So it's kind of a breakthrough. It's almost like inventing the wheel. It's kind of a concept that humans have never really come across before or invented. And at the bottom there's kind of some more newer ones, like decentralized, meaning that no one is controlling, no one organization or country or power or body is controlling it. Everyone is controlling it. So that's what decentralized is, and that's a new concept as well. So obviously Bitcoin has scored very well in those traits of sound money, except in the established history trait, because it's only 10 years old, whereas gold and money money depends on the currency how old it is, but gold is thousands of years old and has been respected as money for thousands of years. Now Bitcoin has to catch up to that anyway. All right, so now I want to touch on some catalysts for growth for Bitcoin, and some of these, probably a few of them you haven't ever heard before, especially if you're not very into the crypto space. So I'll talk about those growth factors, and then we'll talk about the advantages of Bitcoin for the human race. All right, so I'll give you the more well-known reasons why Bitcoin's price is set to inflate over the next number of years. And obviously that's due to inflation. So because of coronavirus and just basically governments racking up so much debt, they've had to continually print money. So this is naturally going to make the price of everything else increase in comparisons to the dollar or to the euro, as more of the dollars and euros are printed. But on top of that, it forces people to get rid of their dollars and get rid of the euro and trade it for uninflatable assets like gold, like Bitcoin, like stocks. Also, the supply of Bitcoin was cut in half recently after the halving. That happens every 4 years. The supply is cut in half. So even if the demand stays constant, because the supply has been cut in half, the price has to appreciate because of that supply shock. All right, so that's a couple of the more well-known reasons. Maybe some more reasons that you might not be aware of. the majority of wealth is still held by boomers and the Gen X generation. So there's the largest discrepancy between wealth ever between 60-year-olds and 30-year-olds. The wealth discrepancy between these, as in the 60-year-olds have way more money than the 30-year-olds, more so than ever in history. So once it starts to become normalized that for financial advisors to recommend Bitcoin as something to invest in to the 60-year-olds, this is where all the money is. So once that becomes a normal recommendation, they're going to start investing even say 5% of their net worth into Bitcoin, which obviously would send up the price. And also further, they're eventually going to die and pass on their money to the younger people, who are also much more likely to invest in Bitcoin, in digital assets, which is also set to increase the price as there's trillions of dollars going to be inherited by people my age and people older who would be more comfortable in investing in Bitcoin and digital assets. At the moment, it's really difficult and risky for large institutions to buy Bitcoin because they're not just like you and me, they're not just trying to buy one Bitcoin or put €100 into Bitcoin. They're trying to buy hundreds of thousands, if not millions of dollars worth of Bitcoin at a time. And to buy that is difficult. At the moment, the infrastructure isn't there, but it's getting there, but it's not as easy as buying, say, $1 million worth of Apple stock and having that Apple stock safe and secure. It's not as easy as doing that right now. So once the infrastructure comes on, there's going to be a lot more institutional investors just because it's so much easier to invest in Bitcoin and keep it safe. Because right now, if you lose your Bitcoin, that's your Bitcoin lost forever. So it's kind of difficult and tricky. And at the moment, there's $3 to $4 trillion worth of money held in hedge funds. So once it becomes normalized, which is just starting to become normalized because Paul Tudor Jones has invested into Bitcoin, but once this becomes the norm for every hedge fund to have a portion of their hedge fund in Bitcoin, just like most of them have a portion of their assets in gold. Once this becomes normalized, let's say 5%, if they put 5% of that $3 to $4 trillion, that equates to $175 billion. If they put $175 billion into Bitcoin, that's already bigger than the current market cap. And we know that if you put $1 into Bitcoin, it doesn't make the price of Bitcoin increase by $1. It makes the price, there has been estimates of, for every $1 that you put into Bitcoin, it increases the price of Bitcoin by $20. Now, if you don't understand how that works, so I'll quickly explain. So say there's 10 houses on a street and everyone has bought the house for $100,000. Everyone's living happily in their house and there's no more houses on the street. Then someone comes along, I really want to buy one of these houses on the street. I'm willing to pay $200,000 for a house. And someone's like, yeah, I'll sell you my house for $200,000. So now after Mr. Market has declared that the houses on the street are worth $200,000, even though only $1 million has actually been put into the houses on the street, now all those houses are worth $2 million. So you can only imagine if $175 billion worth of hedge fund money goes into Bitcoin, which has a market cap of $117 billion. If all that money flooded into Bitcoin over the next number of years, that's only 5%. But even 1%, that's going to really have a positive impact on the price of Bitcoin. Similarly, I'm not sure if you saw the news, but an individual company has decided, because of all the money printing and inflationary monetary systems going on right now, they've decided to put half of their available cash into Bitcoin because they see it as more of a safe haven than actual dollars. They don't want their dollars to shrink away to nothing. So they're putting their cash into Bitcoin. The company is called MicroStrategy. So this is the first instance of a big, large billion-dollar company doing this. And this could send a wave of many companies putting portions of their wealth into Bitcoin as well. Like, for example, Apple has $200 billion in cash sitting on their balance sheet. There's some companies that have enormous amounts of cash. So if some companies started putting if more companies started putting small portions of their spare cash on their balance sheet into Bitcoin to hedge against inflation, obviously that's another enormous growth catalyst for Bitcoin. So some use cases and growth catalysts for Bitcoin include hyperinflation in some countries like Venezuela, where your currency, if you hold any currency, every day the value of that is shrinking at a crazy amount. So no one wants to have loads of money in savings in the bank, and no one really knows what the price of anything is because the price of everything changes every day. So people are using Bitcoin in those countries instead of gold because it's easier to use, it's easier to transact. Or they're also using the American dollar or Bitcoin. But as the American dollar loses its place as the reserve currency because they're printing it so much, Bitcoin will be the solution for hyperinflation, which is happening all around the world in many countries. Also, it's extremely difficult and expensive to do cross-border transactions in Africa. So African businesses are, instead of converting from their local currency into dollars and then passing those dollars cross-border, converting into that other local currency, which costs like, that whole operation costs like 25%, up to 25%, but maybe 8% in transaction fees, and it's just such a headache and really hard to do and takes a long time. They're just using Bitcoin, which is obviously much cheaper, much faster, and more efficient. All right, so now I want you to imagine a world where all the currencies are backed by Bitcoin. So we used to have this in the fact that every currency was backed by either gold or silver. So you could literally go into the bank with your dollars and exchange them for a set amount of gold. So I think $32 was equivalent to 1 ounce of gold. And now since we've broke away from that, you can see the price of gold is now like $1,900 or $2,000. But back in the day, it was $32 was an ounce of gold. So you could literally, this paper just represented the amount of gold that you had in reserves in the bank. Now, why did we break away from that system? It was to fund wars. Governments wanted to fund wars, so they broke away from the gold standard. So they said, no, your British pound is no longer worth X amount of gold, and they started printing British pounds and basically funding wars that way because they didn't have enough gold to actually go out and fight these wars. So wars are basically funded by the invisible tax of inflation because wars are so expensive. You couldn't actually go to war if you had to pay for that just using tax. You would get way too much backlash from the public. So the way they had to do it was unpin themselves from gold because they didn't have enough gold to actually go fight and win a war. They had to unpeg themselves from gold and print some kind of funny money, have their war, and basically inflate away all your savings and fund the war by invisible tax of the everyday person. So if the US couldn't print on demand and fund wars in that sense, if they had to actually have the Bitcoin in reserves to pay for all the military equipment, there would be so much less wars and so much less spending on military throughout the world. And I'm not sure if you think that would be a better thing, but I think that would be a better thing. Less peace out, man, all that crack. So back when countries' currencies were backed by gold, there wasn't economic fluctuations like we know today. So back in the day, there was no recessions, there wasn't as many booms and busts and crazy market cycles. The reason that happens is because, like say in a communist country back in the day, they would choose the price of bread or they would choose the price of wheat, and this always produced either shortages in the amount of wheat that was needed or surpluses in the amount of wheat or bread or whatever. Because a centralized organization has to decide the amount of bread or wheat or the price of it instead of the market deciding how much that should cost, if a central organization chooses, it always works out worse rather than the market deciding. In the long run, it's always better if the market decides the price of something, as we can see from the failed communist experiments with this idea of central planning for everything. So we realized that central planning of goods and services and workforce doesn't work on a mass scale. So why do we think central planning of the price of money is a good idea? Essentially what a central bank does, it decides how much money is worth and what interest rate there should be and how much money should be printed this year. So no one really knows what the price of money is because it's getting changed every day. However, if there was no central planning and money was just Bitcoin, and there was only 21 million Bitcoin, everyone knows exactly how many Bitcoin there is, how many Bitcoin are in reserves in their bank, etc., and everything can be priced against the Bitcoin, which would lead to less recessions as people don't become highly leveraged and everyone knows exactly what's going on. Because when no one knows how much everything is, they kind of take too much risk or they don't take enough risk, and then there's economic recessions. Another positive benefit of having a global reserve currency backed by Bitcoin, or all currencies backed by Bitcoin, is it encourages saving rather than spending. There is this, so I got these ideas from the Bitcoin Standard book. I'll link it in the description. But if you want to learn about economics and the economics of Bitcoin, it's a really, really interesting book. But anyway, so there's this theory that if everyone's spending more money, if everyone spends more money, the economy is great, everything's going well. If people just spend. So that's why the government's always printing money and lowering interest rates, because they want people to spend money, because apparently that makes the economy better. However, economics is extremely complicated and no one really knows what the best system is. So there is alternate theories that, like, just spending, because at the moment people are spending more than they make. They're going into crazy debt, including governments. They're spending much more than they make in tax revenue, so they're going into crazy debt. Everyone's in crazy debt. The debt levels are astronomical. So this idea of just spending infinitely, it's got to crash at some point. it can't go on forever, people just spending more than they have. Whereas with Bitcoin, it encourages saving, because, like, I know my €1,000 in the bank in 10 years time it's going to still be €1,000, but it's only going to be worth €700 or whatever. However, my 1 Bitcoin in the bank is going to be worth 1 Bitcoin later, 10 years from now. So it encourages saving, and Bitcoin probably will accumulate in value over time. So this means that there won't be people, really on the brink of poverty, because they're encouraged to spend all their money just as their money comes in. It encourages saving and it encourages more financial responsibility and not going crazy with your spending. Having a bit of responsibility with your money, it encourages that, which would reduce the amount of stress levels throughout the world, as people aren't on the poverty line and in enormous debt, and governments wouldn't be in enormous debt either. So there would be reduced spending by governments, as governments could only spend the money that they take in taxes. So hopefully governments would be a lot more efficient, and there wouldn't be all this kind of, how inefficient government bureaucracies and everything can be sometimes, and how slow and lethargic they are, and rely on real money that they're getting in today and not just leaving the bill for the next generation. So potentially we're at the start of the very next bull run in Bitcoin, which should start slowly. The exponential growth of Bitcoin in the next bull run, if we are in the next bull run, or if Bitcoin does take off again. But it should start slowly, which it seems to be starting slowly anyway. As anyone who bought, like, say 15,000, 20,000, 17,000 or whatever, as those price amounts are reached, anyone who bought at those levels might just want to cash out and become neutral again and recover their losses. And also anyone who bought Bitcoin at like $100, saw it go all the way up to 20,000, didn't sell, like myself. I didn't buy it at $100, I bought it at 3,000, but I watched it all the way go up to $20,000, never sold. I watched it crash all the way to $3,000. So there may be people who did all that, are still holding their Bitcoin, and then once it reaches $20,000 might be like, okay, I didn't sell last time, now it's time to sell. So there'll be a little bit more selling pressure at the start, but then, hopefully there will be that exponential growth as we have seen in previous market cycles. So a lot of people don't invest in Bitcoin because they think it's risky. Personally, I don't really think it actually is that risky, because I don't think Bitcoin is going everywhere, because I think there's so many like-minded individuals to me who will never ever sell their Bitcoin. Even if it goes down to zero, they're just going to hold on to it. So there is a floor in the price of Bitcoin. So the risk only comes in if you're trying to trade Bitcoin, or if you're trying to cash out in 1 or 2 years, because it's very volatile on its way up. But if you're looking at a very long-term perspective, like I am, looking at least a decade out before you're considering selling, unless it goes into a crazy hyper-growth, hyperbolic stage where the price is unsustained, then you might try and sell a little bit. But personally, I don't really see the risk in an asset that might drop 50%. I don't really care because I'm not selling for another decade. It's like saying gold is risky because say gold went up and down 50% in a year, say it was a lot more volatile, but everyone knows gold is still going to be worth something in 10 years, or still going to be worth probably much more than it is worth right now. So the risk factor with Bitcoin only really comes in if you're trying to trade it, but if you're a long-term investor, the risk is much smaller in my opinion. So now I just want to give you some eye-watering price targets. So the current market cap of Bitcoin is 117 billion, price of $10,000. The current market cap of gold is 10 trillion, which is 48 times the market cap of Bitcoin. So if Bitcoin were to reach the market cap of gold, which I think is perfectly reasonable, this will give a price for Bitcoin of $854,700 per Bitcoin. And I think that's actually a reasonable long-term price for Bitcoin. I think it can reach the market cap of gold, as it is the new digital gold. Do I think it'll get to that price in the next bull run? Probably unlikely. That's probably a bit high. Now that's just the market cap of gold, but it could go higher if currencies start to be backed by Bitcoin, like currencies used to be backed by gold. Then the price of Bitcoin would be in the millions. But that's much less likely, and also further down the line. For the next bull run, the stock to flow ratio is the most talked about price target for Bitcoin, which gives a price target of 250,000. So what's your price target for Bitcoin? Where do you think Bitcoin's price will get to in the next bull run? And in 20 years time, what will Bitcoin's price be? If you like the video, please smash the thumbs up button because it really helps and means a lot to me. Make sure to subscribe for more videos. I usually talk about the stock market, but if you enjoyed the Bitcoin analysis video, went pretty in depth here. If you enjoyed it, please let me know in the comments if you want me to do it again or talk about Bitcoin more. Definitely as Bitcoin's getting into this bull run, I see a lot more interest in Bitcoin coming. Anyway, I really hope you enjoyed the video. I hope you got some value out of it, and I can't wait to see you in the next video. Thank you so much for watching. I really appreciate it, and can't wait to see you in the next one. Cheers.